Another weekly market breakdown. And as always, if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, before we get started, today's video is sponsored by the FXC Academy. Now, the FXC Academy is a stepping stage academy that allows you to earn while you learn. So with the signing up for the FXC Academy, what you'll get basically is you'll get access to their courses, ebooks, economical calendar. They also provide signals on a daily basis. They also have got a beginners, intermediate, as well as an expert course that you will have access to as you go through the program as well. If you are interested, I will drop a link in the description below where you're able to check out what you'll get as well. Now let's jump straight into the video. Now before we get started, it's important to understand what kind of high impact news we do have coming up this week. Firstly, we've got none other than Mr. Government Bailey that's speaking. That's going to impact the Swiss franc over there, not the Swiss franc, the British pound. And he's starting that conversation on Monday, which is at 1 o'clock. And then on Tuesday, we've got the JOLTS job openings for the US dollar. On Wednesday, we've got the ADP non-farm employment changes. And then on Thursday, we've got the CAT GDP as well as the CPI or the core PCE for the dollar index. And then we also have got the NFP on the 1st of April, and it's not an April's full, but the NFP is coming out on Friday on the first day of the month as well. It's important that you do just monitor this as well. If you are someone that trades the low impact as well as the middle impact news, you can just go over here and you can just refer to that. But I'm focused on high impact news that does impact an economy the hardest. So this week we are going to have a look at the Aud Jpy, Gbp Nzd, Euro AUD, USD CAT, Euro Nzd, as well as the gold and the US30. I look for the best probability setups from a technical perspective. Now we're going to start over here with Aud Jpy. Now starting on the monthly time frame, what do we see? Now firstly, if you look left over here, you can see firstly this market had been quite bullish this month as well. Now this level in the market over here acted as a level of support. It got broken. The market tested this level multiple times as resistance. Now we can see how the market has just finally broken above that level from a monthly perspective, giving us an indication that we can definitely expect this market to go and test that previous highs over there. I might as well round this off to 95,000 over there. So I can definitely expect the market to go and test that level over there before we're going to see any downward momentum in this market. Now from a weekly perspective, what do we see? Now here on the weekly time frame, you can see for the last couple of weeks this market has been quite bullish. Now the AUD is one of the strongest currencies for this week, sitting at the top of being one of the strongest currencies, and the Japanese yen has been the weakest performing currency for this month also, and that's why we can see this bullish momentum on Aud Jpy over here as well. Now it's quite difficult to tell you guys that on a weekly time frame that we need to look for anything over here, because the market had printed this massive impulse. So if you take your Fibonacci from the low to the high, you can see that we do have a 50% pullback, but this pullback is going to take a lot of courage in order for the market to drop. So what we do want to do is we want to look for some bullish price action before we get into this market. Now firstly, what do we have for here? Now you can see here, based off Friday's close, the market had printed a red candle, which is acting as a structural level in the market as well. Now this level over here is going to act as a level of the support here, as support over there, and that's going to act as a level of resistance. Now the best way to approach the situation is wait for the market to break above that area, then on the retest start looking for buying opportunities in the market there as well. Now remember, the market can easily also melt to the downside, but the long-term target would stay as well. So we would need to wait for the market to break above that level of resistance, and once the market break above that level of resistance, all of that resistance would then be turned support, and then from there we could start looking for selling opportunities. The alternative way would be to wait for the market to pull back to this level if the market does want to pull back. But the way the bullish momentum is currently set up now, we can definitely expect this move to continue to the upside for the market to go and hit that previous monthly resistance level over there as well. Now next up we do have Gbp Nzd. Now starting on the monthly time frame, what do we see? Now from a monthly perspective, we can see how the market is currently testing a very strong level of support. Now the reason why the market had been so bearish as well, NZD has been the second strongest performing currency, and the GBP has been the sixth or the fifth strongest currency below the Swiss franc there as well. So the NZD has been stronger than the GBP for the latter of this month there as well. But we also have the market potentially giving us a pullback before the continuation to the downside there as well. From a weekly perspective, what do we see? Now we can first see how the market printed this massive impulse. After an impulse you expect a correction, and because the market is currently testing a strong level of support, we can definitely expect the pullback to happen from this level for the market to go and hit the 0.382, which is the Fibonacci that's lining up perfectly with this level of support that got broken, that is now turned resistance there as well. And from a daily perspective, what do we see? Now here on the daily time frame, we can see how the market had broken below this level of support, but almost tested it as resistance. Again, going into next week, what I would like to see for the market to do is we could potentially see the market pull back first, break above that level, come back, and then continue higher. In doing so, the market would then also give us this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Now, the best way, like I said, we are going to approach the situation is we need to wait for the market to break above that level. Then on the retest, we're going to start looking for buying opportunities over there for the market to print this inverted head and shoulders, and for the market to go and test the minus 0.382 as identified from a weekly perspective. Next in line, we do have the Euro AUD over here, starting on the monthly time frame. What do we see? Now, if you take a look to the left over here, as you can see how the market is currently testing the strong level of support. Acted as support over there, broke below that, came to test it as resistance. Resistance got broken, market tested as support. And the market's finally back testing that level of support there once again. The market had also printed this strong level of support, and once support gets broken, it becomes resistance, giving us an indication that we can definitely expect a pullback before the continuation to the downside. If you use the line chart to get the accurate level of support, that is going to be where we can expect the market to pull back before the continuation to the downside. Now, from a weekly perspective, what do we see? Now, here on the weekly time frame, we can see how the market actually went to go and fill in this week over here. So we can definitely expect some pullback before the continuation to the downside in this market here as well. Now, as traders, we have to be reactive and not predictive. We have to learn to adapt to the ever-changing market environment there as well. Now, the best way to approach the situation, obviously, is to make sure that we trade above, not below the structure. Now, this was the last structure that the market had created over here. So the best way to approach the situation, we could potentially see the market fall slightly higher, wait for the break above that level, and on the retest, start looking for buying opportunities for the market to go and test that previous level of support that is now turned resistance as identified from a monthly perspective. On the USD CAD, what do we see? Now, from a monthly now here on the monthly time frame. Okay, so here on the monthly time frame, what do we see? Firstly, we can see how the market had been struggling to break above this level of support that was there to resistance. I can see how the market had literally been just grabbing liquidity above that area of retail traders that was expecting that breakout there as well. Now, the price action that we have over here is we got the potential of the market printing this information, giving us an indication we can definitely expect the USD CAD to continue further to the downside before we get a pullback, and then start looking for that continuation to the upside. Let me do that, because then we will have that confluence of that previous low in the market there as well. So dropping here on the weekly time frame. Now, here on the weekly time frame, we can clearly see how the market had been stuck within this consolidation, and we finally had that breakout. So the market was just stuck within this consolidation. We had that massive liquidity week to the upside and to the downside. The market finally broke to the downside. Now we can start looking for buying opportunities before we go for the long-term sell there as well. The market had also printed this massive impulse, and after an impulse you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high and see which Fibonacci level is lining up perfectly with the structure that we have in the market here as well. Now we can definitely expect a pullback to around this level before the continuation to the downside as well. So the long-term the long-term price for the USD CAD is to the downside, but you can definitely expect a pullback before that continuation as well. So we're going to use that as a target level in the market. Now on the daily time frame, we do have a contradiction between the two time frames. Now, firstly, this was the 0.382 on the weekly time frame. Now, if you take your Fibonacci from the low to the high here, we can see how this level over here, we've got a 0.382 pullback to that level as well. What makes this even more interesting is that the market is currently testing a very strong structural level in the market as well. This level over here acted as support, resistance, support, and once again support. So you can definitely expect a pullback to the 0.382. Now the best way to approach the situation is, you can see the market's quite bearish, is wait for the market momentum to shift, giving us an indication that there is some bull stepping into the market. And then from there, we can start looking for buying opportunities to the upside for the market to go and test the 0.382 of the Fibonacci taken on this daily impulse. Now, next up, we do have Euro Nzd. Starting on the monthly time frame, what do we see? Now, this market has been quite bearish here as well. We know that the euro has been the second weakest currency next to the JPY for this month, and the NZD has been the second strongest currency just below AUD for this month, and that is why you saw this massive bearish price action in the market here as well. Now, firstly, we can see this was a strong level of support that the market had broken from a monthly perspective, and the market is currently testing monthly support as well, giving us an indication that we can definitely expect a pullback to this level before the continuation to the downside. Now, from a weekly perspective, what do we see? Firstly, the market printed this level of support, broke below that, came to test it as resistance, and you can see how the market is well on its way to the downside. The problem is the market also is facing this structure that it had created over here in the market as well. Now, on the daily time frame, what do we see? Now, from a daily perspective, you can see between Thursday and Friday, the market was just stuck within this consolidation phase. We could potentially see a breakout coming through next week. Now, the best way to approach the situation, firstly, is we're going to go on the monthly time frame. We're going to look for the downside target that we have over here. Now, if you go on the line chart just to identify this level that we have over here, there we go. And then we're going to go back on the daily time frame, and there we go. So we can definitely expect going into next week. Now, there's two ways that we can approach situations. As traders, we have to be reactive or not predictive, and we need to learn to adapt to the ever-changing market environment there as well. Now, because the market is stuck between a level of support and resistance, the best thing to do is to wait for the break below the level. On the retest, we can start looking for selling opportunities for the market to go and test that monthly support. Alternatively, if we do get a break above that level, and then on the retest, we're going to start looking for buying opportunities for the market to go and test that previous level of support that is now turned resistance as identified from a monthly perspective. Next up, we do have gold. Now, here on the monthly time frame, what do we see? Now, gold had been quite bullish. I can see how gold got stopped in its tracks last month. Not too long ago. Now we can obviously see the market is still trading above the strong level of support, and that continuation to the upside is definitely expected. Now, from a weekly perspective, what do we see? Now, here on the weekly time frame, we can see how gold had broken above the strong level of resistance, came back to test it as support. The market also printed this massive impulse, and we got the correction. And if you take your Fibonacci from the low to the high over there, you can see how the market tested and rejected the 78.6, giving us a minus 27 target, sitting at 2,119 US dollar per ounce over there as well. Now, you're on the daily time frame. What do we see? Now, for the latter part of last week, the market was stuck within this consolidation phase, and we finally got the breakout to the upside there as well. So if you look left over here, you'll see how the market was consolidating for a couple of days. We got the breakout and the retest. Now, there's two ways that we can look for an opportunity into this market. First, gold is going to go up and hit that level, right? The question is it going to break and continue, or is it going to go test, pull back, and then continue higher? Either way, you do have an opportunity to get into this market early to make sure that you're able to ride the wave to the upside. Next, we do have the US 30 starting on the monthly time frame. What do we see? Now, from a monthly perspective, this market had been doing absolutely nothing, because why? We had some bullish structure there. The market then pulled back to that as well. But you can see how this market had just been trading right at that level and it had not moved. Also, we had this massive impulse. After an impulse, we had gotten into a correction to the 61.8, and if you take your Fibonacci from the low, from the high to the low, from the high to the low, from the low to the high, sorry, we do have a potential for the market to go and hit that level in the long term there as well. Now, from a weekly perspective, what do we see? Now, here on the weekly time frame, based off last week's close, we saw the market had broken and closed above this level over here that acted as a level of support. It got broken, tested as resistance. The market broke below that, came back full force, and we can see how the market is currently trading above that level there as well, giving us an indication that we can definitely expect the bullish momentum to continue on the US 30, provided that no fundamentals comes out and wipe us out. Now, first things first, last week we also had this consolidation phase over here. Firstly, if you look left, you can see how the market had tested the strong level of support, then as resistance, then tested it as support again. Now, the best way to approach the situation for a consolidation market is always to be reactive and not predictive. If this market does give us a clear break and close above that level, then this is going to be the first target that we are going to trade this market to before we go and look for this buying opportunity over there as well. This could also be a potential buying target that you could set your targets to as well. Alternatively, if all else fails and we get a break below this level and on the retest, we're going to start looking for selling opportunities in the market as well. Now, firstly, I want to say thank you so much for your time. Thank you for the support that you guys have shown to the channel. And also, don't forget to check out the Forex Connect. I will leave a link in the description below. Thank you for your time. And as always, cheers for ears.